In the first quarter of 2011, the London Bullion Market Association, or LBMA, conducted a survey of their 56 full members to estimate the amount of gold that traded ownership on a daily basis. This was a study conducted as part of the implementation of the Basel III Agreement to determine whether gold was liquid enough to be considered a Tier 1 banking reserve asset. While only 36 of the 56 members responded, the results were shocking and disclosed the immense volume of gold trades that were conducted on a day-to-day basis. I've highlighted here a section of the report showing some key findings. It shows that the majority of the exchanges are conducted on a spot basis, as opposed to a future basis. Forwards only represented about 10% of the total volume. The most amazing part is that the total estimated daily volume was 173 million ounces per day. This is an absolutely enormous volume of gold exchanges. Let's put it into perspective. We often hear allegations that gold and silver manipulation is carried out on the Comex, but here on the right I've placed the total daily trading volume of all gold futures on the Comex as summarized by the CME Group. You can see that in London the daily volume of gold traded is 10 times that of the Comex, so we can very quickly conclude that the Comex is nothing but a sideshow when compared to the London market. When compared against the total gold production statistics, we can see that about 2 times the annual supply of new gold is traded every day in London. This represents a daily turnover of 3.4% of all the gold ever mined. The Forex market trades at about $5 trillion worth of currency exchanges every day, so by comparison the volume of gold traded in London is over 4% of this number. So is gold liquid? It absolutely is. Gold trades in volumes large enough to be considered a major world currency. So while few world leaders will admit that gold is money, there are some very influential people who would argue the contrary. If gold was not an essential element of world trade, it would not trade as heavily as is shown here. Additionally, we should note that only 1/10 of the gold changing hands is obvious on the surface. It was a survey that brought these numbers to us, not exchange statistics. Those who control the gold and its flow remained anonymous as a condition of the survey, and still, only a little more than half of those surveyed responded. Gold is a very private market. Those who control the gold and its flow want it to be private.